Hey everyone, and welcome back to another portfolio update video for today. So as you can see, over the past week, the portfolio went up by 7.83%, whereas the S&P 500 was up 3.47%. Definitely a very good week for everyone, I would say. Year to date, we're up 18.85%, whereas the S&P is up 4.92%. And since the start, we are up now close to 90%, 89.74%, whereas the S&P is up 23.78%. Year to date, this is basically the portfolio of most of our favorite companies in the stock market. As you can see, one of the big names out there that are still down is, of course, Google, still down 6.3%, Apple down 19.2%, Tesla down 17%. All the rest here have been having quite a good year so far, with the likes of AMD, for example, really having the best performance in the last month and a half or so. Now, of course, that said, could we reach a top, right? We are at all-time highs for a lot of these names. We're all-time highs for, well, various markets and indices. So could it be that we are near a top? Could it be that we are overvalued across the board, just like in 2021? Should we be fearing a crash? Well, let's discuss actually all of this in this video. Not just that, we'll have a look at some macro data. I want to touch a little bit more on that OpenAI/Google announcement. More Google news because, we cannot get enough of Google. Some specific news with regards to Uber as well, Alibaba. We have some, various announcements for SoFi, for dLocal, for PayPal, for Rocket Lab as well. So a very, very interesting video ahead. Now, starting off with, I guess, the most important part, the portfolio update. What is the update? Well, not much, right? Not much has changed other than, most of the positions are up week over week, with some positions that have not really moved much since last week's update. But I did add a small position here in United Health. I've already announced it during a couple of the live streams. And if you are subscribed to this portfolio, you're probably already getting these updates. So small position here, around 10 shares in United Health. I'm already up 2.9%, but this is purely for the short-term rebound. I think it's just mispriced at the moment. I think the crash of 50% in United Health is just an overreaction. We're going to get, of course, a major update at the end of July. This is not a position that I intend to keep for 5-10 years or so. I just did this position also because this is a non-tech company. So if I were to open something, non-tech wise would make more sense, especially because we are now close to all-time highs. And so maybe, I'm not saying it's going to balance things out because it is literally very, very small in the portfolio, but still, if I can get 40%, 50% upside here on out, even for this small position, I'll take it as a win, right? Who wouldn't? And maybe I'll increase it a little bit more over time because I do think I'll have time to increase it at around $300, $310 or so. As for the rest, nothing much has changed other than the fact that finally SoFi is going back up $17 over that. PayPal is the one that is still needing to move, right? We started the year at $90 or so, close to it. So that one, of course, still has, I think, a chance to run up. Then we have Google, of course, closed out the week, $178. Very happy with that performance. Micron here, reported earnings, stock went down a couple of percent, but really not such a big deal. And then, all the rest here is still the same, but there is some company-specific news that we will discuss throughout this video. And so first up, we talk about the rate cuts, right? This is directly from FedWatch tool. We see here what's happening for the December meeting. So right now, we're at 425 to 450 basis points. And look at the current probabilities. If we look at 350 to 375, we're here now at 47.3%. Now, if we go and look at a week ago, we were at 27.3%, and a week later we're at 47.3%. So quite a nice increase, in the probability that yes, we are definitely going to have at least 2 rate cuts. Now, we also had some other macroeconomic data, more specifically here, PCE. So PCE increased 2.3% year over year, in line with estimates. Same with the month over month increase, in line with estimates. Now, core PCE did increase 2.7%, missing the estimates of 2.6%. core PCE 0.2 compared to the 0.1 expected number. Personal spending down 0.1%. The estimated number was actually up 0.1%, and personal income also down 0.4%. Estimated number was 0.3%. So yeah, I mean, everything is indicating for the Fed to cut, whether it's going to be July or September. Currently, well, the money is on a September cut. Then we had, of course, and this is something that we've talked about already a couple of days and a week or so ago, right? OpenAI taps Google in unprecedented cloud deal despite AI rivalry. Now, on Friday, this was not just a sources say, but on Friday, actually a report came out and said the exact same thing. Now, the thing here is that, well, OpenAI is going to use Google's TPUs, but not the latest one, the most advanced one, the older generation, which again is a good thing for Google because that means, again, Google Cloud continues to grow and you have now such a huge player as OpenAI that taps into, well, Google Cloud's TPUs, which also means that OpenAI, first of all, is diversifying a little bit from only being focused on NVIDIA, and of course we also know AMD as well, but they're now going to use a Google Cloud, Google's TPU, but for certain workloads only, which makes sense. But as we've said before, this is of course a very good news for Google as a whole. Then some more Google news. Gemini CLI received more GitHub stars than OpenAI Codex and Cloud Code in 2 days, as you can see right here. This is basically Gemini CLI, right? Steady growth. And then boom, look at this. Huge increase here, just like that. That's not all. What makes Google such an appealing option, right? Google Cloud. If we look here at AI computing capacity for leading tech companies, this is the estimate based on 2022 to mid-2024 NVIDIA revenue and TPU shipments. These are H100 equivalents. You can see that Google, out of Microsoft, including OpenAI, Meta, Amazon, and all of the others, Google is the only one that relies way more on their own TPUs than on NVIDIA. Again, Google, in my opinion, best in class here. Then, moving even further, if we look at Google Inference, teraflops doubling each and every quarter. If we look at total tokens, right, quarter over quarter growth, look at this. Q3, 108%. Q4, 119%. Q1, 97%. But look at the huge increase here. From 71 trillion Q2 2024 to 634 trillion tokens in Q1 2025. I mean, the growth rates here are absolutely insane for Google Cloud, more specifically here. We also had a Citizens JP Morgan upgrades to market outperform with a price target of $220. They said the following: we believe OpenAI's 800 million weekly active users compared to Google's over 5 billion active users, and with AI overviews becoming generally available in the US as of May and leading to 10% query growth in testing, we believe AI is a net tailwind. Quantifying this, we see AI overviews extending from 1.5 billion users in Q1 to 4 billion users in Q3, as AI overviews will cover 2/3 of queries by next quarter per our estimates. Assuming Google's 10% query growth holds, as AI answers a broader set of questions and offers better answers, we think Google may see a mid-single-digit query growth tailwind in Q3 2025. This is offset by ChatGPT. However, we believe negative query growth is likely most severe for ChatGPT subscribers, which we estimate total just 20 million in Q2 2025, given OpenAI's $10 billion ARR disclosed in June, suggesting query growth can accelerate in Q2 2025 and Q3, given wider distribution of AI overviews. To be clear, this is likely to be more informational queries, though Google did note at Google Marketing Live that it is also seeing a positive impact from AI overviews on commercial queries. Net, AI is growing the use of search at a faster rate than ChatGPT is taking share. Well, what do you know? I mean, I cannot wait for Google's upcoming earnings report because I'm sure they'll share even more information on AI overview, AI mode, rising queries, Google Cloud. I mean, this is just going to be a beautiful earnings report. Moving on to Uber. So two things here. One, they're introducing advantage mode and standard mode. What does that mean? Reliable trips keep your riders coming back to the Uber app. Over the last year, we've been piloting a new program called Advantage Mode, which rewards highly rated drivers who cancel less and get the drivers where they need to go safely. The benefit of being included in this Advantage Mode are as follows: 5% more earnings per trip on UberX and other non-premium ride types, more exclusive ride requests, and priority for trip radar matching at airports. So it's a win-win. It's a win for the driver, it's a win for the rider, because the rider will know that her experience right now will be much better, right? And for the driver, he will make more money. And that would incentivize him to stay in the Uber app. So great initiative here from Uber. Then we've had this come out, and I'll remove myself here again. Uber in talk with Travis Kalanick to fund acquisition of Pony AI, but only United States. So Uber Technologies is in preliminary discussion with its co-founder and former CEO to help fund his acquisition of the US subsidiary of Chinese autonomous vehicle company Pony AI. The talks signal Uber's response to growing competition from self-driving taxi services such as Waymo and Tesla. Should the deal proceed, Kalanick would lead Pony AI while continuing his role as head of Cloud Kitchens, a virtual restaurant startup that he founded after departing Uber in 2017 following a boardroom coup. The financial terms of the potential transaction remain undisclosed. An Uber spokesman declined to comment on the deal talks, stating Uber has a platform strategy, and we intend to work with multiple players in the United States and around the world who can safely bring autonomous technology to the world. Now, when this was announced, of course, Pony AI went up, which makes sense. Uber, I believe, did not really move that much, although throughout the day maybe a little bit, but afterwards they had a little pullback, but not by much. I mean, would it make sense? Yes, it would make sense. But as I said, the thesis for me with Uber is, yes, to be the platform, right? The platform strategy to me is still a no-brainer. Could this be a safe bet for Uber? Yes. If they can own such a company, then I'd say they would be less reliant on, well, the fact that maybe a Tesla and a Waymo in the future would not want to list their fleet on Uber. Although with Waymo, I still think they will do it because the results have been amazing for them. So why not? But if Uber somehow, with their co-founder, can take over Pony AI's US operations, I see it as a big win for the company. What do you think? Let me know down in the comment section below. Then we've had a big letter here from the chairman and CEO of Alibaba. We've been talking about Alibaba a lot since the end of last year. Well, for a while, but I became a shareholder at the end of last year. It has been a good performing stock, although the stock is down from their highs earlier this year. So here they're talking about their two core businesses, e-commerce and AI plus cloud. It's always been about that, to be honest, but now they're focusing a lot more on AI plus cloud. We've seen the growth, the accelerated growth in their AI and cloud business. They talk here about the fact that, well, capital management has become a key priority. Shareholder returns actually have been quite good in the last, I'd say, year or so, year and a half. I mean, the return value to shareholder, we distributed around $4 billion in annual and special dividends for fiscal 2024 and have announced a total of $4.6 billion in dividends for fiscal 2025. In addition, we repurchased $11.9 billion of our shares, which resulted in 5.1% net reduction in total outstanding shares, driving accretion in earnings per share. I still think this is one of the most undervalued players out there. They then continue to talk about, well, investing in the future, and again, talking here about AI plus cloud. To realize this vision, we are ramping up investments in three key areas: AI and cloud infrastructure, AI foundation models and native applications, and the AI-driven transformation of our existing businesses. In fiscal 2025, we announced that our planned investment in cloud and AI infrastructure over the next 3 years will exceed the total investment made in the past decade. I mean, a lot of people are sleeping on Alibaba and understand that some do not want any Chinese names in their portfolio. Okay, fair enough. I just still think that this is one of the most undervalued names out there. So I'll keep owning it and I'll keep adding accordingly. Moving on to the number one position in this portfolio, and that's SoFi. So SoFi announced two new things here. Of course, for those that are excited about crypto, crypto is coming back to SoFi. SoFi members will soon be able to buy, sell, and hold a selection of cryptocurrencies like Bitcoin, Ethereum, and Solana. Over time, SoFi intends to offer stablecoins, again, focus here on stablecoins, and a wide range of services, such as providing members the ability to borrow against their assets, expanding payment options, and introducing new staking features. This is just one of the many ways SoFi is focusing on the future of financial services and giving you more control and choice over your money. Now, I know some people are already very excited by this because SoFi previously, before the bank charter, had a crypto business, but that crypto business was quite small. Of course, we can say, oh, but compare it to what Robinhood is doing today, then you can already see what SoFi can do in the future. Yes and no. Robinhood is more of a brokerage type of platform. So of course, trading wise, whether it's stocks or options or crypto, it's probably going to be larger than a SoFi. But who knows? Who knows what might happen with the crypto platform for SoFi? The second announcement was this: pay worldwide, send money to over 30 countries seamlessly. Later this year, we'll offer SoFi checking and savings members international money transfers in the SoFi app at faster speeds and lower cost than traditional services, putting more money in people's pockets. SoFi offers members many unique ways to pay, including via email, phone numbers, domestic wire transfers, debit transactions, Zelle, and soon worldwide payments. This is just one of the many ways SoFi is giving you more control and choice over your money. So here, again, SoFi making, in my opinion, quite some big moves. Moving on to another fintech player here, one of my favorites as well, very, very small, fast-growing, and profitable company, dLocal. So dLocal and BVNK partner to power fast global payouts with stablecoins. Yes, here again, stablecoins. BVNK, the stablecoin payments infrastructure provider for global enterprises and PSPs, today announced with dLocal a strategic partnership that enables faster, programmable, and more cost-efficient money movement across 40-plus markets. BVNK will provide stablecoin payment rails to dLocal, allowing them to offer faster settlements to their global merchant base. dLocal will offer BVNK access to fiat payout rails via its Layer 1 platform, expanding BVNK's emerging markets coverage in Africa, Asia, and Latin America. Customers will be able to fund cross-border payments using stablecoins and have them delivered to recipients in local currencies seamlessly and at scale. I mean, margin-wise, this, of course, is going to be very, very good for them. Talking about margins and expansions, well, dLocal is expanding here yet again. They secured key payment licenses in the UAE, Turkey, and the Philippines, accelerating global expansion and regulatory leadership. So, these strategic approvals from regulatory bodies in the United Arab Emirates, Turkey, and the Philippines ignite a new chapter in dLocal's global expansion, reaffirming our steadfast commitment to navigating and upholding the highest standards of regulatory compliance in diverse markets worldwide. These new licenses join dLocal's growing portfolio of over 30 licenses and registrations worldwide, notably including the FCA Financial Conduct Authority license obtained earlier this year in the UK. So again, this just screams increase GMV, increase TPV for dLocal. And I don't know if you remember, but a couple of quarters ago, of course, the big problem with dLocal is not growth, right? We've seen here TPV keeps on increasing and increasing. Revenue has been doing fine as well. But the issue was margins, right? Margins were declining. But as you can see, over the past 2-3 quarters or so, gross profit margin, operating margin have seen a nice rebound. So yeah, I mean, dLocal is due for a nice little rally. Then Rocket Lab, really short here. Rocket Lab, well, I think it reached $32, $31 or so. In June, they had 4 launches, 10th launch year to date with a 100% success rate. I mean, this company just continues to execute, and Neutron, the Neutron party, hasn't even started yet. So yeah, what can I say? Keep on executing, and this company is going to be a huge, huge success in the future. I mean, it's already a success today, but the future is extremely bright. I could say Rocket Lab to the moon. Now, Moving on to another company that has been doing very, very well, and that's Nebius. Of course, Nebius, I had wished that the stock would drop, but this one also keeps on executing, keeps on doing exactly what it should be doing. And so Nebius to host UK NVIDIA Blackwell Ultra GPU cluster in ARC Data Centers facility in Surrey. So ARC Data Centers this week announced that it has signed a long-term agreement with Nebius to hold an NVIDIA Blackwell Ultra GPU deployment installed at ARC's Longcross Park campus in Surrey. Set to go live this year, the Longcross site in Chertsey will total 54 megawatts across 2 data centers. The cluster will comprise an initial deployment of 4,000 Blackwell Ultra GPUs hosted in a purpose-built liquid-ready data hall at Longcross Park. The CEO of ARC Data Center said AI clouds need sites that can deliver high-density cooling today and scale rapidly tomorrow. Longcross Park was engineered precisely for that challenge, and we are delighted to welcome Nebius to the UK as a key AI tenant. Nebius announced it was planning to deploy thousands of the NVIDIA Blackwell Ultra GPUs, aka B300s, earlier this month, but they didn't reveal where they would be hosted. The deployment is expected to be operational by Q4 2025. ARC said the site will include on-site power generation. And remember, this is what we've talked about before. I mean, Nebius is truly becoming a very, very big worldwide company. Moving on to the last one, and that's PayPal or PayPal. So PayPal is still making moves. Believe it or not, PayPal is making moves. I would be shocked if we're not above $100 by the end of this year. I would be shocked. Now, this is what you get here. By the way, these are Venmo cards, branded Venmo cards. So Big 10 and Big 12 enter historic partnerships with PayPal to enable institutional payments for student athletes in new revenue sharing models. So what would you get here? Up to 15% cash back, free to sign up, Venmo everything, and this is connected to your favorite apps. So again, this is about making sure that people use Venmo and the PayPal ecosystem. This is about money flowing in and then trying to monetize all of that, right? Since Alex Chris came in, he said, look, there was, what was it? $18 billion or so flowing into Venmo every single month, I believe. But it went out quite quickly. There was no monetization. And so the focus has been quite clear for Alex Chris is grow Venmo and monetize it. So they said the following: we're proud to help lead this transformation in college athletics by making it easier and faster for student athletes to receive funds and continue to bring trusted and innovative commerce solutions to the heart of campus life. From receiving institutional payments to making everyday purchases, we're helping student athletes, families, and schools engage in new ways that are modern, secure, and built for the future. We look forward to partnering with PayPal to ensure a secure, rapid, and reliable way for students athletes to receive institutional payments as we welcome in this new era of college athletics. We are thrilled to enter into this landmark partnership with PayPal and Venmo as we embark on a new era of college athletics. Aligning with a global leader like PayPal will unlock a wealth of opportunities for the Big 12. This partnership will also empower our student athletes to receive payments through a secure, trusted platform they already know and use. Beyond institutional payments, PayPal and Venmo already play a key role in how students manage everyday life and will now show up in even more ways across campus. PayPal will become a preferred payment partner for tuition payments at select schools, offering parents and students another convenient and flexible way to pay with their PayPal wallet. Here again, it's to make sure that PayPal and Venmo do not get forgotten. Of course, Venmo in the United States is extremely popular, so I don't think that will get forgotten. But the PayPal brand, yes, is a bit older than that and might have been forgotten, to be honest, if Alex Chris did not come in. But this is, of course, a very smart move, and it does not stop there.
And then finally, Alex, I'll just come back quickly to you. Do you anticipate, and Brett pointed out the obvious, trying to get everyone in college sports into one big tent is a very complicated thing to do. Do you anticipate a time where we do see that and that your company could be in the middle of it?
I think it's happening right now. I mean, we are the best place for distribution. Just as you mentioned, you've got athletes moving between schools. You're going to want one system that works, and PayPal's that system.
So all I'd say here is, well, again, without Alex Chris and PayPal, at your own risk. I know I say this time and time again, and oh, PayPal, look, they've been underperforming the market for a while. Yes, but again, a year from now, who knows how fast PayPal would have gone up, and then the underperformance would be forgotten quite quickly. And so, portfolio at all-time highs, companies at all-time highs, markets at all-time highs. Is it time to take profit? Is it time to panic? What should we do? Well, me personally, as you've seen, I've been quite strategic with my buying here, right? I've also increased cash at the start of the month. I bought United Health as a more defensive play because I still wanted to invest. So I bought United Health. Could have bought, of course, Zeta or Oscar, but yeah, those stocks have gone up, although I still believe those are quite cheap. But I'm not in a chasing mood at the moment, right? I'm not in a chasing mood at the moment. Yes, it's true that things have gone up quite significantly and quite quickly. Are we back to 2021? Well, although we've been hearing a lot more about SPACs and maybe an NFT penguin, whatever, but I don't think we are in 2021. The big difference, of course, is that we are going to get rate cuts, not rate hikes. So that already helps a little bit with the cause. But yes, I mean, we've seen the market. I mean, you can clearly see this with the portfolio. Of course, I also hold companies that have not participated in this huge bull run. Yes, they've gone up, but they've not gone up as fast as plenty of other players out there. So yes, I could still expect, I mean, PayPal going to $90 or $100 would not surprise me because in my eyes, it is very cheap. Google going to $200 would not surprise me either. So it really depends what type of companies you own. There are definitely some companies, I mean, companies that are worth $10 billion or so pre-revenue doesn't make any sense to me. Could we have a market pullback, right? There is that July 9th tariff deadline. If that gets extended, okay, fine. If that does not get extended and suddenly we get again this panic around tariffs, then yes, we could see the market pull back. And to be honest, a little pullback wouldn't kill anyone, right? After the last 2 months that we've had, I mean, a little pullback, I don't think that would hurt anyone. Plus, 3 weeks from now, you will have companies like Netflix, TSM, ASML already report their quarterly figures, and earnings season will start again. So again, the earnings will make the market a little bit more volatile. So that's for sure. So right now, profit taking, yes, profit taking, of course, has never been a bad thing to do, for sure. So I guess that would be the best option if you really want to increase your cash position right now. So all in all, that's about it for me in this long episode, hopefully quite informative. If you want to share anything, let me know down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.